SoFi stock is crashing right now. What does this mean for you as the investor? Should you be selling your shares? Should you be buying shares, etc.? We're going to talk about all of that, why it's crashing, and whether or not this is a good entry price for you to pick up some shares or not. But before we get into that, if you're new here, I'm Austin. I'm a co-owner of cloudbigsuite.com. I'm a stock market investor, and I'm a shareholder of SoFi, of course. So let's talk about this. SoFi, as of recording this video, is down about 5% on the day, but let's remember that is nothing in comparison to what it's done over the last month. Just looking at a chart here, if you bought 1 month ago on May 15th, you would be up well over double on your money. So if you put $10,000 into this stock on May 15th, you would be up past $20,000, more than doubled your money. That's so ridiculous. It makes a lot of sense for a stock to have a little bit of a pullback after a parabolic run like that. Why has the stocks run so much over the last month? It's mostly because of the debt ceiling deal. This debt ceiling deal, if you haven't been following along, reinstates student loan payments. And SoFi used to, before the pandemic, they used to get a ton of business from student loan refinances. And then they take those student loan refinance customers and they port them over to their suite of products that they have. They have savings accounts, they have checking accounts because they're now a bank, an FDIC insured bank. So they have some of the highest interest rates on savings and checking accounts that you can find out there, period. They can also push you over to their invest product, whether that be in stocks or in crypto. They also have funds, they also have life insurance, this whole suite of products. And then not to mention the non-consumer side, which is kind of business to business side, the Galileo and Technesis platform, their technology side of the company that tries to help run the back end of banking. This company is growing into an absolute beast and picking up more and more and more retail customers by the reinstatement of student loans so that they can go ahead and refinance to either a lower rate or a lower payment is going to be great for SoFi. Big tailwind moving SoFi forward over the coming months. All of that said, does this $9-ish range represent a good price point to open a SoFi position? Not really in comparison to 1 month ago. When you look at a month ago, just 30 days ago, that's 20 trading days, the stock has gone up double since then. It would have been great for you to go ahead and pick up shares around the $4.50 mark. That would have been great, but we're not there anymore. Are we going to move back to those levels? I don't think so. Anything can happen, but I seriously doubt it. So if you're looking to open a SoFi position and you haven't already, make sure you're doing it on a fundamentals basis and not just buying into the hype. Buying into the hype is always a recipe for disaster. Make sure you believe that $9 is a good entry price based on your projections moving forward through the coming years about where revenue is going to go, where net income is going to go. That's what moves stock price in the long term. Right now, they're kind of riding a little bit of positive news, a little bit of hype around SoFi because those student loans are coming back. How much impact is that going to have for SoFi moving forward? I would say SoFi right now is really close to fair value and edging on overvalued based on their current metrics when you look to price to book and price to sales. They're also an unprofitable company right now, so if you're a person who never invests in unprofitable companies, SoFi is just not an option for you right now. That said, multiple times on multiple conference calls, annual shareholder meeting, etc., they've talked about Q4 being the first time that SoFi reaches GAAP profitability, okay? GAAP profitability. That's huge. That's generally accepted accounting principles profitability. That's the holy grail of accounting metrics as it relates to net income. So, since a lot of investors will never invest in an unprofitable company, getting to EPS positive is kind of like proving themselves in the market and getting more and more of an investor base that wants to buy this company and hold this company over the long term. And when companies turn that profitability corner, like we've seen with Palantir over the last little while, they end up getting a massive flood of money into that stock because the thought process goes from, okay, they're a money loser, they're very risky, to they've proven themselves and they're going to be able to withstand the storm. When SoFi goes from unprofitable to profitable in these crazy, really high interest rate times, that's a really big feather in their cap where they can say, look, even in the most tough financial times, we were able to flip from money loser to money gainer on the bottom line. That's huge for investor sentiment. Speaking of raising rates, one of the other reasons that SoFi might be dropping a little bit right now is because yesterday the Fed chairman Jerome Powell came out and said, hey, we might raise interest rates in July again. Even though we're at like an 18 or 17 year high on interest rate, they might raise it again. But what I see for SoFi is this not being necessarily a terrible thing. What this means for SoFi is that they can acquire even more customers, because if the Fed funds rate goes up more by another quarter point or another half point, what SoFi is going to be able to do is go ahead and raise the rate that they're paying you, the interest rate they're paying you for holding your money with them in their savings account and their checking account. And in order to get that rate, you have to enable direct deposit. So this is genius of the company to be able to capitalize on rising rates, which just allows them to increase their web by pulling customers in with the savings and checking account and then moving them out to different products, because they kind of have this SoFi membership where you get a slight discount on your rate if you're already a saving and checking member. You get a slight discount on your personal loan rate, you get a discount on your student loan rate, etc. So even if Jerome Powell and the Fed does decide to raise another time in July, which I think would be a terrible, terrible decision, and I seriously doubt it's going to happen, this could still be a positive thing for SoFi in the long term, because they're going to be able to increase their market share by stealing customers from other legacy banks that are still paying like 0.01% on a savings account. So that would be great for SoFi. Let me just wrap this up real quick. Is SoFi a great buy right now? I don't think it's a great buy, but if you have a very long-term outlook, 3 to 5 to 7 years, I don't think it's a bad thing to pick up SoFi shares right now. Be ready for some ups and some downs though. Don't put all your money into your SoFi position all at once. If you want to own 2,000 shares, maybe buy 200 right now, and then in a few weeks buy another 200. If we have a dip, buy another 200. If we have another dip, buy another 200, etc. and so forth. So that if we have some short-term pain due to just a regular old pullback because the stock has run so far, or if we get pain because the Fed starts to raise, then you can go ahead and pick up shares at a lower price, lower your cost basis down a little bit. So just go ahead and slowly increase the position if you're still going ahead and buying SoFi shares. That will be my advice. Do whatever you want to do. It's all up to you. You got to live and you got to learn and you got to make some mistakes sometimes. But I would say slowly build that position over time, not go all in at once. All right. Hope you enjoyed the video. Thanks for tuning in, and we'll see you later.